Hello, everybody. Welcome to Housing Bubble 2.0 News of the Week, or as I like to call it, another episode of How the Virus is Affecting the Housing Market, etc., etc. Yeah, it's going on way too long, and it's sort of, I guess you could say, dragging us all down here. I'm Randy Patrick, your host today, putting the realism back in real estate. Again, hope everyone's doing well. And one more thing, just to ask you guys, if you haven't had a chance to, please subscribe to my channel, help my channel grow and sustain. That would be great. And what we're going to do is we're going to get right into it right now, because today is a day where there was some statistical information that has come out, and I like to talk about it, of course, as fresh as possible. So we got information today on May's existing housing data that was supplied by whom? National Association of Realtors. All right, so we're going to get into it right now. So, of course, there's all sorts of articles written talking about this, I guess you could say, in the news media. This is from Bloomberg. So, obviously, sales of previously owned U.S. homes fall to the lowest level since 2010. We're talking about sales volume, sales peg count, the number of sales. We're not talking about the value of the sales. We're talking about just the number of sales. So, if you take a look at the information here, you've got closings at a 3.91 million rate, below a 4.09 million forecast. So really, I guess you could say May's numbers underperformed as per expectations on some analysts. My assumptions would be analysts possibly from National Association of Realtors, who produces the report. And also the point here also is that market for condominiums are weaker than for single family homes. We'll get into that in a second here. So let's kind of breeze through some of this. So you're going to see anywhere you're looking for information, you're going to see different headlines. This is from Zero Hedge. U.S. new home sales plunge 10-year lows as exodus from cities accelerate. So part of the narrative now is the fact that we're going to see people leaving the urban centers to go to suburbia and maybe even farther into the sub-rural areas as well too. Reason being, we don't want to be around one another anymore. We don't like each other. We don't want to catch a virus. We're spooked. We're scared of what's going to happen in the future. So let's leave the urban center, maybe get more value, more better quality of life. The pandemic has taught us about working from home. Maybe we can get along with that. See, so there's a lot of changes going on in various industries and working relationships and the whole bit, which will affect housing as time goes on. But again, as they say here, despite low mortgage rates and soaring mortgage applications and a modest rebound in new home sales, existing home sales were expected to tumble further in May. So that's scoop on that. Let's go to the next article here. Existing home sales plunge in May, but realtors think that was the bottom. So of course, the real estate agents, NAR, National Association of Realtors, are going to think that, hey, this is probably the worst that we're at, because if you think about it, February, March, April, when we were all shut down, you didn't have much sales going on. You weren't able to go out and look for homes and do open houses and view properties, etc. So guess what happens? Well, that affects the pending home sales. I guess you could say slow down. The indexes went down. So therefore, we're going to see that going forward now with respect to actual sales. So if pendings are down April and March and April, we're going to start to see that reflecting in May and June and July, etc. So we're seeing that actually happen right now. All right, let's move on here. Housing slump, big time. As you can see, the U.S. existing home sales tumbled to the lowest level since 2010. So bang. In 2010, we're kind of right in the, you can see where it slumped, which was, we'll call it the lowest point in the last housing crisis. You can see where the spike was and then where it's gone down to, and we've grown and now we've plunged again. So, that's not a good sign as far as housing is concerned. But it's not surprising to me, basically what we're seeing in the marketplace right now. Things just aren't moving. People can't make decisions. Yeah, we're going to have some sales, etc. Like again, but it's annualized, to a much lower amount. About 1.5 million less sales this year than I guess they projected earlier in the year. But we'll see what happens. It's just people aren't buying houses at this point in time, or at the rate they used to. Now we're going to now get into this a bit now here. So this really is the NAR, National Association of Realtors, information. It's on their website. You can check it out. So existing home sales fall 9.7% in May, while NAR expects strong rebound in coming months. So, they're going to spin it any way they can with respect to, hey, things are going to look better as time goes on. We're at our lowest point right now because of the virus and things like that. Well, hey, by the way, we're seeing virus counts rising. Are we in a second wave of the COVID-19? We don't know. So when you take a look at some of these situations in housing, are we prolonging the inevitable here? It seems like we're in like this sort of time warp, and we don't really know what's going on, and everything's just sort of holding, and it's kind of an eerily quiet situation going on right now. So excuse me, whenever I say the word COVID, I have to cough. I don't know why. Maybe it's a psychological thing. So anyway, here is the summary of May 2020 stats from National Association of Realtors. And they produce this. You can check out on their website. So existing home sales, so we can see the annual rate, which is a seasonally adjusted annual rate, SAR, basically has gone down from what was going to look like about a 5.6 million annual sales rate to a 3.91, just under 4 million annual sales rate, based on where things are headed at the current time frame. All right. So median price for existing home sales, it's gone up a little bit. It kind of plateaued. So we're just kind of, we're kind of holding, right now where we're at. It hasn't done too much. You can see that the existing home sales median price change, though, has dropped. So year over year, we can see that, the past, if you sort of look in the middle of the graph, you've got, December being high, a little bit of drop in January, February, March high. I guess April still had a good year over year, and now we've seen a significant drop in the year over year price change with respect to May. So that shows me that even though the sales are slowing down, now and now we're going to see price points are going to start to plateau, which is what we've all been waiting for. Okay, the percent change year over year in home sales, obviously, we had our sort of a lot of sales in December of 2019. January was pretty good, Feb pretty good, slowed down in March, obviously, and we had our I guess you could say our drop, almost 20% there in April, and now we have 26.6% drop in sales for May. So we've seen basically a positive trend of growth, and again, existing sales on sales volume, reasonably decent for the first part of the first quarter of the new year, and then we basically now have seen the exact reverse. So we've actually, whatever ground was gained, we've lost with respect to the past 3 months. Not looking too good. So there you go. All right. Market conditions. This typically is a summary chart just of what's going on in the marketplace. So we can see that they always again, the year-over-year comparison of May this year to May 2019. First-time home buyers up a couple points. Sales to investors up a point. Cash sales down a couple points. Distressed sales up a point. Distressed sales are a combination of foreclosed homes, so homes that have gone to the foreclosure auction, that have been taken back by the lenders, put on the MLS as what's called REO, real estate owned and purchased, plus short sales. That those two combined give you the distressed sales that NAR is reporting on. Typically, short sales run about 1%. So out of that 3%, a third, 1% is typically short sales across the board, which, as I always like to comment on this, going, if you're not looking at short sales as a market opportunity, nobody else is, and therein lies the opportunity right there. Okay, so we move on here. Existing home sales by region. Obviously, the South, the most sales going on. Clearly, temperature, climate, etc. Midwest, always movement there. West, 19%. Northeast, 12%. The Northeast is taking a beating in a number of different levels here on price point and sales activity. And just again, when you're having weather and pandemic, you're not going to have people going out looking for properties and shutdowns, of course. I mean, look at the big cities in the U.S., like New York City. It was shut down. People were not showing properties, looking at properties. It's going to be reflected out in the sales that we see right now. All right. So let's move to the next slide here. Okay, housing supply at the national level. So believe it or not, we've seen a little bit of an increase in the housing supply. So you've got your national month supply, which is the blue line, which is a combination of your single family and your co-op condos. Your co-op and condos actually are starting to increase. We'll talk about that in a little bit here. So we've had a little bit of increase, I guess you could say. I think we're about 4.8 months worth of inventory right now, blended in, which, as we always say, 6 months inventory is kind of the industry standard, which we would call it a balanced market, which means you've got this, same amount of buyers and sellers entering the marketplace. All right. Now let's go to this one here. Sales by price range. So clearly you're sort of 40% of the sales across the board, across the nation, were the 250 to 500K range. 37% were 250 to 100K. Not much going on in the above 500K range. You can see 10%, 3%, and then 3% of a million plus. The 0 to 100K, which is your affordable housing, maybe old beat up homes, depending on where you are, only 7%. And that we see that number shrinking every single month. And we'll go into that in a second here. So the percent change in sales from a year ago by price range. So we can see that, obviously if we had a 26.6% decrease across the board, which is a lot. We take a look at the percent price decreases in sales range. You can see that the over 1 million mark was a significant decrease, almost 50%, 47 and change percent price decrease in sales above $1 million. We can see that the 71 million is almost 40%. The 0 to 100K, 33%. So that, the bottom level has always been difficult with respect to sales because there's just no properties available. So that's the situation. So we're seeing significant decrease in the low end homes price point because of lack of inventory. I'm going to say that on the having the 1 million plus range, when we've got 47.4% sales decrease, is not because of inventory. There's plenty of inventory out there because people just aren't buying them. Okay, it's not due to a supply. There's a ton of that market supply available in West Coast, the California area, coastal regions, Miami, especially New York City. We know that New York City's taken a beating now in certain boroughs, Manhattan especially, with respect to the higher end home. So just people are not buying for various reasons, and therefore you're going to see that reflecting the sales volumes from a year ago. All right. And again, if you want to look at this is again produced by National Association of Realtors. We take a look at the percent, they break it down by region. There's 4 basic regions in the U.S., the Northeast, the Midwest, the South, and the West, which we know. And we can just take a quick look here to see that, where sales took a beating. The West took a beating quite a bit, especially in the million plus range. You have 56% difference. That was huge. And then you take a look at the sales distribution, the chart below. You can see where, the majority of the sales are happening in the 100 to 250K range, 250 to 500K range. And then you can take a look at the other side of the spectrum there, the outliers on that. So again, just, when you start looking into the numbers and how the stats roll out, it seems to make sense regionally. Percent change in inventory by price from a year ago. So again, the 0 to 100K across the board really has had the least amount of lost inventory. So it dropped 26.3%. That's hurting that segment of the marketplace there. So again, I look at the numbers, I see what's going on. I just try to make heads or tails of it. I mean, does it really matter in this case? I just look at the summaries. But if you want to, if you're interested in looking at your region, how things are going, you can find this information. You can go to NAR.Realtor and you'll see the stuff there in their press releases. All right. This is some interesting information which I want to get into. So, we talked about the condo and co-op sales were hit much harder than house sales. Both were ugly. So sales of single family homes, out of that 26.6%, so the single family homes plunged 24.8% year over year, 23.57 million units SAR, seasonally adjusted, and the sales of condos and co-ops collapsed by 41% year over year to 340,000 units seasonally adjusted. So clearly, you have, looks like the condos, dropped more. And, when you think of it again, if people are not looking to buy in densely populated, so the condo / multifamily arrangement, they're buying less because they don't want to buy in a densely populated area because of the pandemic and the virus and things like that. So, just keep that in mind, and we're going to see how this is going to hash out as time goes on. This is interesting. So we will see down the road if a move to the suburbs is one of the permanent changes that the pandemic has initiated. The NAR in its report, is in that camp. Relatively better performance of single-family homes in relation to multifamily condominium properties clearly suggest migration from the city centers to the suburbs. After witnessing several consecutive years of urban revival, the new trend looks to be in the suburbs as more companies allow greater flexibility to work from home, which is interesting because we have seen a lot of gentrification going on in a lot of the urban metro cores, and the comment was, well, the millennial buying segment prefers the urban centers to suburbia because they want to be in the city core. They want to use public transit to commute. They don't want to have to drive and have an hour-long commute. They want to be near restaurants and dog parks and shopping and and interesting things to do in the city, and they don't need the McMansions. So that was the sort of revival of the urban center. And as they mentioned here, maybe we're seeing a switch because of the environment we're in. So, all right. Now, this is something very interesting. This is from Wolf Street, and he picked up on that, which I do appreciate. Median price drops from April to May for first time ever in the data. So the NAR didn't mention this because it was very inconvenient, clearly. The median price dropped from April to May. So April to May price changes reflect the spring selling season in the housing market. Big increases in the median price from April to May are the norm. Even during the worst years of the housing bust, the median price increased from April to May. It just always does not matter how bad the housing market. So traditionally, we've always seen an uptick between the 2 months because of seasonality, everybody wanting to buy, et cetera, during the spring selling season. The month-to-month increase from April to May tend to be big. Last year was 4.2%, but not this May. This May, the median price fell 0.8% to $284,600. The first April to May price decline in the data going back to 1999. So that is kind of interesting. So, we've seen a massive sales volume decrease, and now we actually see a value decrease. Now, this is across the board averaged out, but it's interesting that, we saw an uptick in the, you can take a look at this is essentially, year over year percent change between April and May. So, even last year we had was over 4%. The year before was 2 and change. This year we've lost almost 1% from that price point. So now I know what you're thinking. Oh, losing 1%, less than 1% is not it's inconsequential. It is inconsequential, but maybe this starts the trend of some price breaks on going forward basis here. We've seen again when you talk about over 26% of sales volume down, and now we see a little bit on the price point. To me, it just shows that we're at the point where we're going to see some changes moving forward. So you got to keep all this in mind. All right, you got to look at the numbers, and that's what I do. I look at the numbers all the time. But let me read some of the stuff here with respect to some of the NAR comments here. So sales completed in May reflect contract signings in March and April during the strictest times of the pandemic lockdown, and hence the cyclical low point, said Lawrence Yun, NAR's chief economist. Home sales will surely rise in the upcoming months with the economy reopening and could even surpass 1 year ago figures in the second half of the year. So, this is all just thinking out loud as far as I'm concerned, all right? It basically is homes, could even surpass. So it could. There's no projection here. We don't know what's going to happen in the future. Everyone's projecting going the other way, but NAR has to, be positive because that has to support its members. New home construction needs to robustly ramp up in order to meet rising housing demand, Yun said. Otherwise, home prices will rise too fast and hinder first-time buyers, even at a time of record low mortgage rates. So all he's doing is stoking the fire, saying, let's hope that we get some more inventory coming from the home builders anytime soon, because we see house prices rising even more than what we expect. Well, funny that there's a lot of groups out there that are saying that house prices are going to decrease. Now, CoreLogic said that. I forget who else did it. I think Zillow maybe even said that. But they're talking 1 to 4%. They're not talking double digit, 20%, whatever, like what we'd like to see, of course. But still, that's what they're saying. So right away, the NAR is essentially saying, oh, we think it's going to go up. We're stoke the fires for competition here. Another NAR spokesperson said, although the real estate industry faced some challenging circumstances over the last several months, we're seeing signs of improvement and growth. I'm hoping the worst is behind us, said NAR President Vince Malta. NAR, along with our partners and 1.4 million members, are already working to reignite America's real estate industry, which will be a key driver of our nation's economic recovery. So, again, what signs of improvement or growth? This was not a sign of improvement or growth. We're seeing a month-to-month decrease in price, and we're seeing month-to-month decrease in major drop in sales year over year here. Mortgage applications. Everyone's touting the mortgage applications, growing big time the past few weeks. All applications do is pre-approved. Well, first of all applications do are saying these are people that have inquired about getting a mortgage. It doesn't say that, if we see a spike in mortgage applications, did we see a spike in qualified buyers, number one? So not everybody gets qualified after the application process. And two, are all these people running out and looking at homes? We don't know that information is not available. So please keep that in mind. Other interesting notes here from NAR: relatively better performance of single-family homes in relation to multifamily condominium properties. Clear suggests migration from the city centers to the suburbs, which we did mention. So again, we're just seeing change here. We don't really know what's going on. When you take a look at statistics and numbers, as I mentioned before, with the new home sales, being wildly off month to month, we don't even know where they get their numbers and how come it deviates. They produce numbers and it deviates. Here we're seeing some pretty substantially slow sales, and I'll talk about this in future videos, but we're back up. We have more unemployment. We have unemployment that's cutting deeper. We have future unemployment already talked about with companies suggesting they're going to lay off, etc. We have massive commercial real estate issues, and so commercial real estate typically are malls and large areas that employ people. So if we're having commercial real estate issues, it means companies or stores or retail outlets are having issues, which means more unemployment issues. Forbearance has kind of leveled off right now, but delinquencies are up, and delinquencies are not just forbearance, they're other mortgages as well too. So we see a big change going on here, and I think the worst is yet to come, folks. So be prepared and see what's going on out there. As I mentioned, there are certainly ways to take a look at this environment to buy a home on the cheap, and to also do some investing strategy as well too. Reach out to me if you'd like, and we'll talk about that. And I will be hitting a lot more videos this week because a lot of news has happened, and I see a lot of changes going on. And one of the things that I do want to mention, though, is that I'm reading headlines, I'm looking at articles, I'm doing my research, but also I'm kind of like what we call the boots in the ground and feet in the street. So I get a lot of my intel from what's going on in the marketplace, from what I hear from people, what I see myself, and what I'm experiencing. So a lot of stuff happening right now, which to me indicates that things are going to slide down the road here. So that's good news for people who want to buy homes on a little more inexpensive than paying premium for stuff. Today's market. So anyway, everybody, appreciate your time today. Again, if you're not a subscriber, please subscribe. Certainly help my channel grow. Appreciate likes, comments, and if you want to reach out, I'm here. I know I've got a few people I got to get back to. We had obviously Father's Day weekend, so I took a little bit of time off. Did lots of yard work and things like that. But going forward, now I'll be back at it. So again, take care, everybody. We'll look forward to speaking with you guys soon. Take care.